All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Apologize for my voice. It is coming back here a little bit, but it's had a little bit of a rough slide, but I feel great. It just don't sound quite the same. So thank you for bearing with me there on that. But we have the market here set to open up a little bit lower this morning. On the S&P, we're looking at about a 7-point open lower if you take in fair value. And, that's not a whole lot compared to yesterday. If you take a look at where S&P futures are, they're pretty much where they were, in the last hour of trading yesterday, and erasing the little kind of uptick we saw into the close on some pretty monster volume. But we saw that little bit of uptick. Now you can see futures overnight, a little dip as the Asian sessions got underway, rebounded pretty much, pretty flat, and then Europe opened. And we start to see news come out of Europe about the Italian bond situation. In fact, a comment from or a report that was published as far as the overall economic health of the region that was put out by the European Union basically bashed Italy's budget plan. They accused them of optimistic assumptions when it comes to their spending program and how that would happen. Basically said there was some, election biases here with it. And so that has kind of pushed the yield down on Italian bonds. And, overall, we see that the market, this is kind of the reaction there to that. This isn't U.S. election stuff or Donald Trump stuff or Attorney General stuff. The timing of it and the news that came out of it, it's highly correlated, and it's not exactly coincidental there with it. So that's the Italian market situation's good for about 10 points on the market. All right, good to know. In all, I don't think the markets are going to be looking all that closely at the Italian situation. The markets know that it's an issue and that it will be an issue going forward, and has been an issue over the last 6 months. So it's one of those where does eventually the pot boil and overflow? Yeah, probably. In fact, eventually it's probably the whole Italian situation is probably good enough for a 4 to 6% pullback on the markets globally when it erupts. The reality, though, is it's still in the simmer stage. And so it's going to cast off a little steam here and there, and that's kind of what we see it doing right now. Here in the markets. Now, yesterday was pretty strong day for the bulls. We saw the market internals improve. We saw fund manager monies coming in. We saw differentiation. We saw decent but not excessive volumes come in. We saw a pretty bullish stack of sector performances. Overall, healthcare was one of the big winners, which has an election theme associated here to it. But the reality is the U.S. political situation is going to continue to be here with us for a long time. It's been with the markets for years now, and it's going to be with the markets for many, many years to come. And it'll be interesting to see how kind of the first little bit pans out here. We do see some some interesting words back and forth, but at this point they are just words. Now the market today is going to be looking to the Fed, who is going to be doing something fairly unusual. Normally Fed meetings, they start on Tuesday, and the Fed minutes are then released or the Fed statement is then released on Wednesday. They actually started their meeting yesterday, and the statement is going to be released here today. Now, this isn't one of those statements that has a press conference or updated forecast. It's just a statement about any signs of the outlook ahead. Generally, and pretty much, in this administration or the past under Janet Yellen, the Fed does not raise rates or alter monetary policy on this meeting, kind of this in-between meeting where, generally they'll just release a statement and it's done. They don't change anything and the markets kind of move on. And that's kind of what I think the market's expecting is just to see a statement and move on. And, that's probably what will happen and what will transpire here today. So anyway, that's kind of some of the stuff that's going on out there. We have a few earnings trickling in. We don't have a lot in terms of, big time analysts. We have a few things here and there. But overall, yesterday's market rally, up over 2%. It took the markets to a very interesting level. And depending on which index we are looking at, this level's a little bit different, okay? And if we come in here, we saw this kind of rebound, this snapback back here in October. And I mentioned this in the message feed yesterday. And that this is an interesting area to find some possible resistance, okay? It's also up near the upper Bollinger Band. We're very far from the 7-day moving average. So it's a very nice bullish type move. But it's one of those where, we do have some of those resistances, potentially coming in. If we also come into annotate and we just put on a simple Fibonacci retracement of the entire downward move, market closed pretty much at a 62% retracement yesterday. And so it's one of those where this has been a strong rebound. A very strong rebound, and in fact one that if the market were up 15 to 20 points here this morning, I'd probably buy some puts just for the short term. But it is one where a little bit of gap down. I think short-term direction is a little more ambiguous here. But overall, that's kind of where the market's coming into, with the market internals being bullish and having switched as quickly as they have. In fact, this has been one of the fastest moves in the market vibe that we have ever seen. And with it moving this quickly, there's always going to be some whipsaw risk, but, it does suggest that the market's going to return to less volatility, more differentiation as it goes forward. And I think if we see the market open this morning and we see the differentiation that still exists out there, that even if the market's a little bit lower or trades down a little bit, I don't think that's a big bad bearish sign as long as that differentiation is maintained. If we see that differentiation go, if we see that, all of a sudden it's just everything getting taken out, I think there's some real danger there. And danger for a pullback back into this 272 to 274 area, which, just on a pure technical standpoint, I mean, that's just a shallow retracement, right? But that would be 80 points lower, to put that into some context. So, there's still some substantial risks out there. We saw here in February, kind of a little bit of how some of those pullbacks looked, right? And I'd be surprised if we don't have a little bit of that going forward. I'm on record as saying I don't think this is going to be a V-shaped recovery. But at the same time, the way the metrics have moved, the risk of that happening has, increased substantially, quite substantially, in my opinion. Now, the S&P isn't the only index out there. If you look at the Dow, it's actually blown through the retracement levels, blown through the high from October, right? That reaction high from October, we see some Dow outperformance going on. If we look at small caps, we're lacking a little bit, but they're kind of right back to this October reaction area here as well, with a little ways to go for its 200-day moving average. And so they look just slightly different. If we take the FXI into effect, right, it has blown through some of those October reaction levels. It's absolutely blown through it, piercing the upper band, band's expanding. It's in a pretty bullish type of position here, along with the emerging market ETF, the EEM. So, we definitely have, some pretty good strength coming in, as far as who outperforms overall. If we see the U.S. dollar continue lower, we'll see FXI outperform the IWM, or, Chinese stocks outperform small caps. If we see the dollar go higher, it'll be an opposite type of reaction there. But dollar here still trading below the 7-day moving average. And I find that to be a very, very interesting move. But we haven't had a thrust in the dollar, a kind of a move in the dollar that's kind of that dramatic type of move where you go, okay, that's a pretty good sign. It's really ready to boat race lower here. So anyway, that's going on here with the U.S. dollar. Now for the challenge, I have two positions on the board. I have Halliburton and I have Adobe. Halliburton here this morning, oil's down about 30 cents. Halliburton doesn't have a pre-market indication on it. It's kind of bid and ask is in between. We've seen a few rogue trades here, but nothing really there with Halliburton. It's one where the original trade parameters are all intact, and I'm still looking for it to come into this retracement area. I'd like to see it hold on to at least 36 today if it does decide to pull back a little bit. But I don't have a ton of torque in the options at this early stage, right? I really needed to come into this 37, 38 area to get the torque in the options, and I knew that setting it up. And so hopefully we'll get to see some of that. But we did see a lot of implied volatility come out of it yesterday, like it did with a lot of options. And then I have Adobe. Adobe stock's trading higher than where it was when I got into my option play. That said, my option is still probably down about $700-800. But nice day for it yesterday, up about 5%. They do have, an investor conference tomorrow that they'll be speaking at, and one next week that they'll be speaking at. And sometimes things come out of those. It's not an always thing. But with something like Adobe here, it has really kind of this consolidation element that it had been on after this kind of snapback here. It really broke out of that yesterday, and it broke out of that on decent volume. We saw other stocks in its group, like Microsoft, make the similar move. It's a very bullish move. Now, I decided not to roll my option up a little bit. I decided to be a little more risky with it. I have the 250, so we are in the money here with it. It's one where there's going to be some really nice torque if it's able to move up into the price targets that we've talked about, here with it. As far as how it reacts this morning, I'll probably let it play out. I'm not, looking to really, run away from it or move away from it here this morning. There's no real pre-market indication on it, but, with the Dow, it probably opens down a little bit. But overall, I think it's one of those that has, if we do see the market continue to go higher, it's one of those that I think goes substantially higher. And, I do like having the exposure there with Adobe. Now, as far as another position, I did keep the cash, yesterday. We did see, some interesting stuff, some triggers and whatnot, but I decided to keep the cash instead of adding the exposure. I'll be taking a look at, how things set up, how things trade. May put some of that into play a little bit later here today. But, as I mentioned in the note yesterday, I'd like to see how Adobe plays out here a little bit in the next, this morning and this afternoon, before really deciding how aggressive I should be with the cash that I have. Thanks for hopping on. Have yourselves a great one. I'll keep my thoughts posted in the message feed, and we'll talk to you later. Take care.